At the March RBA Board meeting, we saw the cash rate remain on hold at 1.5%. Now, no surprises there. We know that the rate has been widely tipped to stay on hold from most economists around the country. Now, this is an interesting point too, because Governor Lowe also made mention in February that he doesn't see any strength in moving the cash rate for a good period of time. So that's giving business confidence to potentially further invest. He's also going to be pretty happy because house prices are starting to fall in some markets. So he's confident now that they've got the balance right. So being able to keep the cash rate lower for businesses to invest. Now, we've seen that in terms of the business sentiment numbers. Business confidence is really high. That's supporting the story. Also, what's supporting the story is unemployment continues to fall, ticking down slightly lower. In addition to that, we've seen job ads start to also increase. So generally speaking, in terms of the business environment, the economy is looking pretty good. If we take a look at some of the equity results as well, they support that story. So we saw sort of mid-year results coming through from some of our companies on the stock market, and we saw some positive numbers come through. So a lot more stronger numbers than negative numbers. So that has actually kept confidence sitting pretty well. So if we look at the business environment, it's looking pretty good. So in addition to that, we've also seen the RBA looking at their forecasts around GDP and inflation, actually forecasting a pickup, a good pickup in GDP and inflation into 2019 and beyond. So they're the good news stories. What we've got the challenges with at the moment is the consumer, so the household. So there's a couple of challenges going on here. Firstly, wages growth. We're not seeing any of that wages growth. We're not seeing that flow through from business just yet. And that's obviously why we've potentially got this sort of very, very soft inflation number. So we need to see some of that wages growth flowing through. We've also seen obviously the cost of living going up in terms of our medical costs, those types of things, our health insurance costs, our electricity costs all going up. So households aren't feeling the love. They're not feeling as wealthy as they were before. And obviously with house prices moving down, that could also further impact on their confidence around how they will be spending their money going forward. Now, in addition to that, we've also got challenges around retail spending. So retail spending is definitely soft. We need to see a little bit more confidence in people getting out there and spending that money. And I think that is because there is talk about the level of household debt that we're also carrying at the moment. So from that point of view, we've got this record level of household debt, we've got consumer confidence down, we've got wages also, sort of being sluggish in terms of the increases that we're getting more broadly across the economy. And that is, affecting the consumer. They aren't quite confident enough to get out there and do all of the heavy lifting that they need to do to see the economy move forward. So that's why the RBA have kept the cash rate on hold for now. And what's also interesting about that, we saw just recently APRA come out and talk about the speed limits they had in regards to investment lending. With property prices falling in some areas, APRA has sort of flagged that the use-by date of that potential speed limit hurdle in the amount of investment lending that can happen is now looking to be removed. Now that's obviously a big important move from APRA to be able to get more confidence into the market and starting to see, getting that balance right where we had an overheated property market. We don't have that overheated property market at the moment, so they're starting to adjust those levers. Now, if you want to learn more about some of those levers and what APRA will do next, I've shot a video on that, so check out the link. In addition to that, I'm interested in your feedback in terms of where you see the cash rate moving. So if you've got a comment that you'd like to share with me, make a comment below and I'll get in contact with you.